All right. Sorry. Hello, everyone. We are going to start with the third live session of performance management. And in this session, we are going to deal with the concept of planning and operational variances. I'm not sure whether you guys have covered this part or not, but this is something which is extremely important. So, any one of you, have you covered this part? Okay, I'm not getting any response from you guys. So I'm assuming that you guys are yet to cover this part or not yet. Okay, fine. So just wanted to remind that this is 17th of January and probably you will have 13 days of January and approximately 28 days of February. That means you are left with 50 days probably, right, in your exam. So try to plan accordingly. All right. So we are going to start with planning and operational variance. Now, what is planning and operational variance? See, let me start with a very simple and basic example. Let's suppose that at the start of the period, at the start of the year, the company was expecting that standard price of raw material. Let's suppose we are talking about sugar, is going to be around let's say it's around $2 per kilogram. This is something which we were expecting when we made the standard, right? But what happened is the actual price of sugar which company paid, or which the purchasing department, which actually they paid, they actually bought this material for $2.8, or they bought this material for $2.4 per kilogram, right? So if you calculate the traditional material price variance, so material price variance in this case is going to be the standard price, which is $2, minus the actual price, which is 2.4, multiplied by actual quantity used. Let's suppose for simplicity, actual consumption was 10,000 kilograms, right? So this is going to be around 0.4 multiplied by 10,000. It's going to be around 4,000. And since actual price is higher than the standard price, so we will call this as an adverse variance. So according to this result, it seems that the purchasing department actually bought material at higher prices. So he is probably not a good candidate for bonus. We need to identify the factors what actually happened, right? So when we started looking at the factors which actually contributed towards this price increase, we came to know, surprisingly, we came to know a fact, which is that because of some market shortages, due to some shortage of raw material, let's suppose sugar was not available in the market, the prices increased by 30%. Prices increased by 30%. Overall, there was a 30% increase in price, right? So what is the situation? The story is that you made a budgeted price of $2 per kilogram, but because of some uncontrollable factors, because if there is a problem in raw I mean sugar production, or if there is unnecessary export of sugar, or whatever the reason for shortage of of sugar in the market is, I cannot control it. I'm just the purchasing manager of my company. How can I control the supply of sugar for the whole region? I cannot do that, right? So because of some uncontrollable reason, prices went up by 30%, right? So 30% is like $2 times, sorry, 2 times 30% is like 2 times 3 is 6, so it's 0.6. So technically, there was an increase in prices by $0.6 per kilogram, and in market, prices were around $2.6 per kilogram. But what actually happened is my production purchasing manager did some. extremely good negotiations. And instead of buying raw material at $2.6 per kilogram, he bought the same material at $2.4 per kilogram, right? So if you if you let's suppose if in the absence of this information, it seems that purchasing manager didn't perform well because he purchased material at higher prices. But in the presence of this information, if we consider this information, then we can understand that this increase in price is not his fault, right? So what actually happened is he actually he actually performed well because instead of buying material at $2.6 per kilogram, he bought the same material at $2.4 per kilogram. So it's a good performance, right? It's not a negative sign, it's just a bullet point, right? So what we are going to do is we are going to split this variance into two parts. The first part we call as planning variance. Planning variance is the difference between original price minus revised price. What do you mean by this? See, what is the original price? Original price was $2. Original price was $2, and the revised price was $2.6 per kilogram, right? So this is going to be an adverse variance multiplied by actual quantity used, which is 10,000. So market circumstances suggest that variance, because overall prices were quite high, so it seems that if everything goes according to the market forces, the price variance should have been 6,000 adverse, right? Because there is a revision in price. Revision in the sense that prices are not same as you were expecting. But then the second part is the difference between what should have happened and what actually happened, right? We try to compare the revised minus actual, and then we calculate operational variance. Operational variance is something which we can control. So instead of buying material at $2.6 per kilogram, the same purchasing department bought this material at 2.4 per kilogram, multiply by 10,000. So that means it's going to be zero point 0.2 times 10,000. It's going to be 2,000 favorable, right? So this part of material price variance is because of uncontrollable factor. Uncontrollable factor means something which is beyond the control of managers, right? And this part of variance is something which actually is because of the performance of purchasing manager, because he really negotiated well, right? So we say that this is basically controllable. This variance actually happened because of controllable factors, right? So if you net off these two variances, 6,000 adverse and 2,000 favorable, overall variance is 4,000 adverse. But this 4,000 adverse is not the fault of purchasing manager. It's actually the market forces which actually uh, force. These are the market forces which actually created this adverse variance, right? So if you just see this variance, you will say that, hey, please don't give bonus to purchasing manager because he overspent. But if you split the 4,000 variance into 6,000 and 2,000, you came to know that no, overall market conditions were horrible. Overall prices were too high. Still, the manager bought material wisely and he purchased material at a price which is less than the market price, right? So that's basically the reason why we calculate planning and operational variance. So what we do is we split all variances, whatever variances we have, instead apart from overhead variance, material, labor, sales, we split all variances into planning and operational variance, right? So planning variance arise due to uncontrollable factors, right? Managers are not responsible for it, for these variances, and bonus should not be based on planning variance, right? Operational variance, what are operational variance? These are because of controllable factors. Controllable factors means, let's suppose that company changed raw material supplier of raw material because our main supplier is not selling its material in our region. Let's suppose our supplier went bankrupt, let's suppose, and and we are unable to get material from our supplier, right? So that's a fact, that's something which we cannot control. I mean, we cannot control the insolvency of our supplier, or we cannot control the fact that the government imposed a ban on the import of our original raw material. So any factor which is beyond the control of managers will be the part of planning variance, right? And if variance arises because of controllable factors, let's suppose I decided to change supplier of raw material at my own, right? No one forced me to do that. Supplier is still there, but still I want to change supplier of raw material. In that case, I am responsible for my decision. So whatever happens, I'm going to be accountable for it, right? So that comes under the operational variances, right? So operational variance arise due to controllable factors. Managers are responsible for these variances, and bonuses should be based on operational variances, right? And how we will calculate these planning and operational variances? See, the idea is very simple, right? We actually try to make three parts of the standard, right? What we know till now is that there are two types of figures. The first one is the standard, and the second one is actual. So when we compare standard with the actual, we get the variance. Now there is a third um, figure which we call a revised standard, right? So let's make three columns. So the first column is the original standard, which we prepared when we started this year, right? But in the middle of the year, let's suppose that there was something changed, and we needed a revision. A revision was required, right? So we will make revised standard, and then we will, and then we have, of course, we have actual results, right? So we compare it with actual results. For example, in this case, let's suppose that the price of raw material, original price was $2, revised price was 2.6, actual price was 2.4, right? Let's suppose use it. Let's suppose that instead of, I mean, let me try to change the example. Let's suppose instead of, we were not able to get sugar, and somehow the company decided, the management production manager decided to use an alternate material, and alternate material was jaggery, right? Or any other sweetener. Maybe the stevia, maybe it's any other plant-based sweetener, right? So what happened is original consumption was 0.1 kilograms per unit. Original consumption was that you use around 0.1 kilogram of sugar. Or let me make some figures quite simple. Original consumption was 1 kilograms per unit. Let's suppose one unit require 1 kilogram. It's too sweet, but let's assume for simplicity. But because we are using an alternate material, now alternate material will be required around 1.2 kilograms per unit, right? So that's basically if you are using jaggery instead of sugar, or if you're using any other sweetener, because the material was not available, because government put a ban on import of raw material, because there was a shortage of raw material, it was 1.2 kilogram per unit. But what actually happened is the labor used 1.25 labor use 1.25 kilograms per unit, right? So that means these two figures are compared to calculate planning variance. And these two figures will be compared to use calculate operational variance. So let's take the example of material variance. So material price variance will be divided into two parts: original price minus revised price multiplied by actual quantity used. This will be the part of planning variance. And in operational variance, we will compare revised price minus actual price into actual quantity used. Similarly, in calculation of material usage variance, we will compare original quantity required for actual production minus revised quantity. And in material usage variance here, we will compare revised quantity minus actual quantity used into standard price, right? So what I'm trying to communicate is like we will from original to revise is planning and revise to actual is operational. Original to revise is planning and revise to actual is operational variance. Same goes with the labor variance, right? Any problem till now? Is there any doubt on whatever I've explained? Because we are going to start with a question from here. Okay. So whenever this question, yes.
Please, I want to ask, with respect to the planning variance, considering the planning variance is comparison of the original, let's say original price as against the current market price. Um, why are we using the actual quantity or
Okay.
the actual usage?
What is the original usage?
So I'm looking at the multiplication of the difference between the original price and the revised price against the actual usage. I want to understand why we are using the actual usage rather than probably the original usage, the standard usage.
Here?
I don't know if you get my question though.
Okay. I think I'm not getting your point. Can you write in the chat box so that I can understand actually what you are trying to ask? Sorry, I'm extremely sorry, but I'm unable to
Okay.
get your point. Sorry.
Okay.
For the planning variance, why we are using actual usage as against the standard usage. The planning variance, why we are using actual usage as against the standard usage. So probably you are talking about this one.
Yeah. So the first the computation on top of the last one,
Okay.
MPV equals actual usage in bracket original price minus revised price, that line. So the actual usage we are multiplying with the difference between the original price and the revised price. I'm asking why we are using actual usage to multiply that difference rather than standard usage.
Oh. Now I got your point. Now I got your point. Okay, got it. Uh, see. Um, I'm not sure whether I should explain this or not, but let me try to explain. Material price variance is standard material price. This is the basic formula, right? And then I will compare that formula with whatever you are asking. Standard price minus actual price into actual quantity used. And original formula of this one, usage variance is standard quantity minus actual quantity. I mean, standard quantity allowed for actual production minus actual quantity into standard price, right? So, see, now let me try to explain one fact. See, actual quantity used and a standard price. You have options, right? You can use actual quantity here, and you can also use standard quantity. It's up to you, right? Now, try to listen complete explanation of this, because half explanation is going to spoil the whole concept, right? You can use standard quantity allowed for actual production to multiply the difference. But if you use standard quantity here, then you have to use actual price in the other formula. So it's a combination. You have to use one figure has to be standard and one figure has to be actual, right? So individual variances will be, of course, different. But when you add these two variances, total variance will remain same,
Oh, okay.
right? So what I'm trying to say
Okay.
is that this part is important. This part is actually the variance. It doesn't matter what figure you're multiplying, but keep this thing in mind that there is a combination. One has to be actual and one has to be standard. Even if you calculate this material price variance and usage variance, there are multiple combinations of with which figure you are going to multiply the difference, right? If you see the old past papers of FI, you will not find this actual quantity and standard price here. This is original standard price. They said in one formula they use revised quantity, in the other formula they use original quantity. So there was a huge mix up. So there are multiple ways of multiple combinations of what with which figure you can multiply. But it's important to understand that if you're using one figure here, you should use the other figure here. So in order to keep it simple, if I don't want to make your life miserable, to make you more comfortable, what I'm trying to do is I'm just trying to split this part into two. Like in both cases, I'm using actual quantity use. But if you see the old study text of BPP and Kaplan, they have not used actual quantity use. They have used some other combination. I will forward you an article which has been written by ACCA examiner in which he has used multiple combinations like this with this, right? So don't get confused with that. It's just the fact that if you're using actual quantity here, you have to use the standard. Otherwise, your total variance will not reconcile. That is the only reason why we are using actual quantity used and the standard price in the other part. Otherwise, there is no other explanation of this. And because we have multiple options, different students will get different answers. So what we did is we try to make this as a standard that okay, fine, let's lock this, that we will use actual quantities in price variance, and we will use we will use quantity actual and prices will be standard. I will share a very short video, 5 to 10 minutes with you, where I will switch this and the total variance will remain same. So don't worry about that. I hope I
Okay.
have answered the question.
Yeah. Thank you.
Okay, you're welcome. So where we were, yeah. So this is basically how we calculate. Now the most important point here is to identify what is original, what is revised, and what is the actual. Once you have made these three columns, then the next part is very easy, just to put everything in the formula and calculate the answers, right? So that's basically quite simple. But the most important thing is to put to classify what is original, what is revised, and what is actual, right? Number one. Number two, whenever this sort of question comes in PM or F5, sorry, I'm used to of saying F5. If some sort of question comes in PM, in that case, if the question is of 20 marks, because section C is of 20 marks, generally means in 90% cases, 12 marks are for calculation, like you have to calculate material price, planning variance, operational variance, blah blah. And generally 8 marks are for theory, right? So we will first calculate the variances, and then we will see how to write the answer, how we can write a good answer, right? I mean, answer writing means you should know how to cover these 8 marks theory, what points you should write. Now it's up to you whether you write those points in 2 lines, 3 lines. It's up to you, right? So let's just start with the question. Let's see what we can do here. I hope, okay, so we are going to do with this question. Okay, I hope you guys can see this, right? Okay, so let's move to the requirement first. Let's see what is given in the requirement, right? So the question is actually asking you to do the assessment, assess the performance of both the production manager and the purchasing manager. So you are required to make an analysis of production manager and the purchasing manager, right? For the month of November, there are up to 2 marks available for additional calculations. That if you calculate any further variance, then only 2 marks are available for that. Overall, this requirement is for 8 marks. So we can split that. Okay, fine. If the overall requirement is 8 marks, then 4 marks are for production manager and 4 marks are for purchasing manager, right? It's a reasonable assumption, right? And sorry, what I did, I should read requirement A first. Sorry, my bad. Okay, so let's start with part A. For each ingredient, soya bean and sugar, calculate the following variances for the month of November. So material price planning variance, material price operational variance, material usage planning variance, and material usage operational variance. So basically you have to calculate price variance and you have to calculate usage variance. And in price variance, then there's a planning part and there is an operational parts, or all for 3 marks, right? So let's start with this question. Let's see what we can do here. Try to focus on what is the standard, what is revised, what is actual. Vegan company is Vegan company is based in Zealand and manufactures a wide range of non-meat and non-dairy products, which it supplies to retailers. Its mission is, now this is the first time when ACC examiner has given mission in the variance question. Generally, mission statement is given in performance measurement question. This is one and only question where variances has been, where mission statement has been given in, sorry, what I'm saying. Mission statement is given in variance question, right? Now, what is the mission statement? To produce high quality, cruelty-free products sourced from local ingredients, right? So the most important is that if you are a vegan, if you follow the vegan product, so whatever you are producing should be of high quality, cruelty-free products, local ingredients, right? These are three important points. Now, the company uses a JID system and holds no inventories. Its best-selling product is soya milk, and for the month of November, production level were as follows. So budgeted production level was 440,000, actual production level was 480,000. It's a huge difference between 440,000 and 480,000. You produce 40,000 units more as compared with the expectations, right? So probably we need to understand, we may need to highlight this point, that why the production was so high, but right now we are not focusing on this. Okay, the main ingredient, are we recording this? Yeah. The main ingredient used in soya milk is the finished product, is the finished goods, right? Soya milk are soya beans and sugar. So both of these are raw materials, right? Both of which are grown within 50 kilometers. 50 kilometers in the sense because they were using local ingredients. 50 kilometers of vegan premises. The company markets its soya milk as on this basis, making it appeal to customers committed to caring for the environment, right? Extract from the standard cost card per unit of soya milk or for November is shown below. So they are saying that soya bean require 0.2 kilograms, which is approximately 200 grams, and the price is 5.9 per kilogram. So now the important point is you have to convert either it will be good if you use kilograms because the prices are in kgs. So it's better to use kgs, right? And sugar is 0.012 kilograms, which can be sourced at $1.8 per kilogram. So what do you think? Is this the original standard? Because this information is basically from the standard cost card, right? So do you think that this is the original standard or this is the revised thing? What is a doubt? Because it's not actual. So probably we can reasonably assume that this is the original standard, right? Let's proceed. The company used 94, sorry, the company used the company used 94,000 kilograms of soya bean and 5,280 kilograms of sugar in its actual production of soya milk in November. So what do you think? This 94,000 kilograms of soya bean and 5280 kilograms of sugar. This is what? Revised consumption, actual consumption.
Actual consumption.
This is actual quantity used, right? Good. The actual cost of vegan company of soya bean in November was 5.7 per kilogram and the actual cost of sugar was 1.9 per kg. So actual prices are also given. This is the actual price of sugar and soya bean, right? Now, the market price in Zealand for soya bean decreased by 10% in November. Let me try to highlight with a different color. Already it's bold, but still. The market price in Zealand for soya bean decreased by 10% in November, but for sugar it increased by 20%. This was due to unusually cooler winter, which had a positive effect on soybean crops but a negative effect on sugar crops. Right? Can you reread this part with blue color, highlighted with a blue color, and try to think what is this information all about? What examiner is trying to tell you?
I think it's indicative of the revised um, price
Yes,
price for the two materials or
yes.
ingredients.
So original standard was um, price for soya bean was 5.9, right? What was the actual price of soya bean? Actual cost of soya bean in November was 5.7, right? So actual was 5.7. So initially we thought that probably he purchased well, but then we know that came to know that market price in Zedland for soya bean decreased by 10% in November. So let me try to use a calculator here. Okay. So 5.9 times 90% because there's a 10% reduction, 5.31. So ideally the company should have bought these material at 5.31 because overall there was a reduction in market prices. But somehow the company got these raw material at 5.7. So we know that market was favorable in the sense that prices reduced. So original minus revised is a good part. I mean, this part is good, but this part is not good because we were unable to, uh, what you can say, we were unable to grab the opportunity, right? Acha, but for sugar it increased by 20%. What happened to sugar? Sugar original price was 1.8, actual price was 1.9, and they said that the price was sugar increased by 20%. So 1.8 times 1.2 is 2.16. Like, so instead of getting material at 2.16, we bought the same material at 1.9. So it seems that somehow there is a confusion. In one part we performed well, in other part we couldn't perform well. So that's something which we need to look at, right? The purchasing manager is responsible for negotiating prices with the supplier. So whatever actually happened, who is responsible for all this mess? Purchasing manager. So this paragraph should go in the performance of purchasing manager, right? Then the second part, vegan company made a change to the standard mix at the beginning of November, reducing sugar to 10 grams per unit in order to comply with the new government legislation. So what was the original consumption? Original consumption of sugar. Original consumption of sugar was uh, 12 grams, right? What they did is reducing sugar to 10 grams per unit in order to comply with new government legislation. Do you think that we need a revision in this case? I mean, this reducing consumption from 12 grams to 10 grams should qualify for a revision. Why they did this? Because in order to comply with the new government legislation. So we cannot do anything with that. If government ordered us to do so, we have to do it, right? So maybe because of some nutrition facts, the government said that no, you have to use 10 grams of sugar, right? So if the government is demanding to use 10 grams, we have to use 10 grams, right? So that's basically something which should go to revision, right? Now, now I will ask you to think over it for the next part, for the next point. Let me try to mark with a different color. To try to maintain the consistency of the milk, the company also decreased the soya bean content from 200 grams per unit to 190 grams per unit at the same time. So whatever I have written, I have highlighted with a blue marker. Try to read it and try to tell me, and I mean try to give me an idea whether this should be included in the revision or whether we should ignore this. Because the only thing which matters here is the revision. Otherwise, the formula is quite simple.
So I think this is a revised ingredient mix for the material that are being used.
See, what is the problem? If you see this question, because when we were doing this question in physical class, there was a confusion because the statement says that to try to maintain the consistency of the milk, vegan company also decreased the soya bean content from 200 grams per unit to 190 grams per unit at the same time. So if you just read this blue part, you may think that this is a decision which vegan company actually took. I mean, you may confuse with this fact that actually vegan company was the one who took this decision to try to maintain the consistency of the milk. Company decided. Company also decreased this. But if you read the whole paragraph, you will understand that why they did this, because the government asked us to reduce the consumption of sugar. And in order to maintain consistency, because of that government decision, we need to do this, right? So in the absence of this legislation, maybe let's suppose if government didn't ask us to change the mix of change the quantity of sugar, maybe we might have not changed the consumption of soya bean content, or we might have not changed the content, or I mean the consumption of soya bean. So actually this happened because of the first decision of government. So that will also go, I mean that will qualify for a revision, right? So original consumption was 0.2 kg, but the revised consumption is 190 gram is 0.19 kg, right? Then there is an actual consumption, right? And then the question says that, hey, look, the production manager is responsible for the product mix in vegan company. So whatever happened in this paragraph, production manager is going to be blamed for it, right? No one else should be, right? None of the above. Now this is an important statement. None of the above changes to the prices and quantities were reflected in the standard cost card for November, which is prepared by the accounts department and updated twice a year. Someone said something?
Sorry. Yeah, I have a question.
Yeah.
So I think I would also get confused on this, but where like when you're explaining that probably this 190 grams, like considering it as a revision standard. So I was wondering, since they say that the company was trying to maintain the consistency of the milk, so I'm wondering, like the consistency of the milk, is it like the specifications of the soya milk that the company wants? Is it per when they set it as the company, not as per the government legislation. So at some point, I feel like for them to decide to decrease the soybeans from 200 to 190, they were trying to stay in line with the specifications that they want for the milk. Is it because, so I'm a little bit confused. I'm also, I wanted to also try to understand, is it possible that, I mean, I think it's possible, because like for the sugar, the revised standard, is it going to be equal to the actual standard?
Let me try to explain this. If the question says that vegan
Okay.
company made a change to the standard, let me try to explain. Let's suppose
I can't hear you. I'm sorry.
in order,
Sorry, I can't hear you.
can you hear me now?
Yes, but it's a traditional one.
Okay, can you hear me now?
Yes, yes.
Okay, so what I'm trying to communicate is, let's suppose that the question says that the company made a change. I'm rereading this paragraph. Vegan company made a change to standard mix at the beginning of the November, reducing sugar to 10 grams per unit. Let's suppose that the this part ends here. And then they say in order to try to maintain the consistency of the milk, they also decrease the content of sugar or the soya bean. So if this legislation part, let's suppose in the absence of this legislation part, we will not be allowed, we will not allow to revise the standard, because production manager took this decision. So if production manager has taken the decision, he has to bear all the consequences. But because of the reason that the government legislation has change the consumption. I'm not responsible for that. Government asked me to reduce the sugar. And because we reduce the sugar and we have to maintain a certain quality, we have to maintain a certain quality of milk in order to preserve the quality or maybe the taste or whatever you call it, we have to reduce the consumption of soya bean as well so that it will taste similar to the user as it tasted before, right? So we were bound to do change from 200 to 190 because the government asked us to reduce the consumption of sugar, maybe because of obesity or whatever it is. So in if the question is with this government legislation, it will require the consumption, the revision of the standard. Without the government legislation, you are not supposed to revise the standard. Number one. Number two, let's suppose that this part was not given. Let's suppose to try to maintain the consistency of the milk, let's suppose this part is not given. The question says that vegan company also decreased the soya bean content from 200 gram per unit to 190 grams per unit at the same time. That means this part is independent from the first part. I mean, reducing sugar is something different, but we are saying that let's do this as well. So it's not because of the first change, it's an independent decision. So if it's an independent decision, then there will be no change, though no revision in the standard. Is it clear?
Yes, it's clear.
Okay, thank you. Thank you. So, yeah. So what we are supposed to do now is um, we are supposed to calculate this material price variance, usage variance, and all these variances, right? So I'm doing it in on Excel, right? I hope you guys can understand doing on Excel. Is it okay if I do it on Excel?
Yeah.
Okay. Okay. So let's, Ajay, if there is any problem in listening in voice quality, just let me know. I will change my gadget again. Okay. So we will make three columns. The first one is original, the second one is revised, and the third one is actual. Right? Price of soya bean, sorry, and price of sugar, right? And usage of soya bean and usage of sugar. So let me put my tablet here, right? So, oops, sorry, I cannot control it. Okay. So what is the original price? Original price is 5.9 for soya bean, and 5.31, and then 5.7, 1.8, 2.16, 2.9. Oops. Okay. Consumption, soya bean, original consumption was 0.2. Then 12 grams divided by 1000 is 0.012. Revision was 0.19. 10 grams means 10 divided by 1000. And actual consumption is this one, 94,005,280, 94,005,280. This is the total consumption. Okay. And the actual production is, or we can say production. Budgeted production was 440,000. And the actual production was 480,000. This is budgeted production, not the standard production, but I'm just writing it. We will use 480 in all cases. We will not use 440 in any case, right? So the first variance which we have to calculate is material price variance, right? material price variance and um, for sugar, sorry, for soya bean and for sugar and planning variance, operational variance, planning variance and operational variance. So we are calculating material price variance, right? Um, this is the first part, right? We are calculating. And for soya bean, if you want to highlight soya bean, right? So this is the first basic part, right? So material price variance, if you want to calculate planning variance, you have to compare original with the revised one, right? So original price minus revised price. Multiply by what? Multiply by actual quantity used. Actual soya bean used by the company is 94,000. Oops, sorry. Multiply by 94,000, right? So this is 55,440. Or let me try to do it in this way. Original price minus revised price multiplied by actual quantity, right? So it's like this minus this multiplied by this. Whatever you want to do it. You want to do it with data, you can do it, right? So since the revised price is less compared with actual price, so this is going to be a favorable variance because market were favorable for the company, right? But instead of getting material at 5.31, or you can say instead of getting material at 5.31,
Sorry.
yes,
I think you used, I'm not sure. Is it 480,000 or 94,000?
400,000 is the finished product, the quantity of soya milk, right? For producing 480,000 units of soya milk, the company used 94,000 units of soya bean. Soya milk is the final product. This one. Let me try to highlight this. Mm. Soya milk is the finished product, and soya bean and sugar is the raw material, right? So this is soya bean.
Soya bean.
Soya,
Oh, soya
sorry. Even I'm confused. This is soya milk.
milk.
They must have used some different name probably. So this is soya milk we are producing, right? The finished product. Okay. So they must have used, they should have bought the material at 5.31, but they actually bought it at 5.7, right? Actual quantity used will remain same. Oh, you are right. I should have used 94. Yeah, you are right. Sorry. Should be 94,000. Sorry, my bad. So this will be 5.31 minus 5.7 multiplied by 94,000, right? So this is adverse, right? So manager is responsible for this adverse variance, which makes sense. Instead of getting the same material at 5.31, you got it at 5.7, right? Now, same thing which we will do with sugar, right? So for sugar, sorry, what I'm doing. Yeah, for sugar, it's original price minus revised price multiplied by actual consumption of sugar, which is 5280, right? So it's 1900.8 adverse. And operational variance in operation, we will say that, hey, look, instead of getting the same material at 2.16, you got this material at 1.9. Well performed, right? Multiply by the same figure, so it's favorable. So if you want to conclude the performance of this manager, if you want to conclude the performance of purchasing manager, overall planning variance is planning variance is this plus this, and operational variance is this plus this. So overall price variance, material price variance is favorable, right? So if material price variance is favorable, makes sense, but it's important to understand why this was favorable. This was favorable mainly because soya bean, this was favorable mainly because of planning variance, right? Because planning variance was overall favorable, operational variance was adverse, right? So if you want to analyze how they performed, it seems that in case of soya bean, if we talk about soya bean, the manager didn't perform well because he was unable to negotiate well, as the operational variances were 36,600 adverse. Or okay, fine. Let's try to analyze this later, because let's try to concentrate on calculation. We will analyze in the next part, right? Next part, in the sense, we will analyze it later. Okay. Now what we have to do, let's try to calculate its usage variance, right? Uh, this is the price one, right? Okay, material usage variance. Okay. Material usage variance, same, we will just copy and paste it here, right? So in material usage variance, we have to start with the soya bean. Let me try to make it a full one, right? So we have to start with the original consumption. What was the original consumption of soya bean? It was expected to use, now we are going to use this one. We are going to use this part. Let me try to make it simpler for you. Okay. So in planning variance, we have to start with the original standard. Original consumption was 0.2 kilograms for the production of 480,000 units. What is the revised consumption? Revised consumption says that no, you should use 0.19 kgs multiplied by 480,000. Why we are multiplying it with 480,000? Because we always have to multiply with 480,000, right? So original consumption is 496,000 minus revised consumption is 91,000. So which makes sense, because in revision we reduce the consumption of both material. Multiply by the original price. Original price of soya bean was 5.9, right? So we are using the same formula, right? This formula is simply this minus this multiplied by this, right? Now, what is the operational variance? In operational variance, we start with the revised. So revised standard says that you should have used 91,200 kilograms, but you actually use actual consumption was 94,000 kilograms. Multiplied by standard price. Standard price is same 5.9. So this is approximately 16,520 adverse, and this is favorable. We will interpret it in 5 minutes, right? In sugar case, this is basically the case of sugar, right? In case of sugar, we should have consumed this quantity for the production of 480,000 units. But original consumption was 0.12. Revised says that no, you should have used 0.01 kilograms. How much actually we use? We actually use 5280 kilograms. Sorry. Multiply by the standard price. Standard price is 1.8. Right. So 1728 favorable. In operational variance, we have to start with the revised one. So revised one says that 0.01 multiplied by 480,000, right? Same for the 800 minus actual quantity used is 5280 multiplied by the standard price. So this is 864 Edwards, right? So this is basically something where production manager is responsible, and for this purchasing manager is responsible, right? So this is basically the overall variance. Now let's try to copy and paste it in our OneNote file so that we can analyze it. Okay. Just a second. I'm just waiting for it to get synchronized here. Any question till now? Okay. So this is basically something which we did on Excel, right? Now we have to analyze the performance by using 8 marks. So for 8 marks, you first of all try to understand how we can analyze the performance, right? So production manager, 4 marks, and purchasing manager, 4 marks. So let's start with purchasing manager first, right? Let's start with purchasing manager, right? So generally how we start is generally we start with the overall variance, right? The total variance, and then we split total variance, and then we figure out planning variance and operational variance, and then we conclude it, right? I'm repeating. The general strategy is we start with total variance, like what was the overall variance? Overall material variance was $18,272 favorable, right? This one. We did that, right? And why? So it seems that purchasing manager performed well as he saved the cost. But it's important. So this is the overall variance, right? But sorry, it is important to, it is important or vital to split total material price variance into planning and operational variance, right? To analyze performance well, right? Or you can write it in your own wording, right? So the next point will be based on planning variance, something which managers can control. Planning variance are those variance which are due to some uncontrollable factors. In this case, what was the uncontrollable factor? As in this case, this one. Let me try to clean it a little bit. As in this case, right? As in this case, the unexpected change. Because if the change is expected, probably it would have been part of the original standard. The unexpected change in weather resulted in overall planning variance of, what was the planning variance? Planning variance was 53559 favorable. And since this is because of uncontrollable factor, sorry about the writing, purchasing manager cannot be responsible for it. Yeah, will not be responsible for it. Is not responsible for it. Right. Now, we wrote for the planning variance. Now, there are two important facts which I really want you to write whenever you are answering the question. The first one is the actual event that happened, right? This is extremely important for you to connect it with the scenario. Second, writing the variance. What was the result of that variance? What was the result of that uncontrollable factor, right? It's important to write the significant variance number in numbers, right? Then we will switch to operational variances. Operational variances represents the variance arise due to controllable factors, as in this case, it is evident that now where he failed, where your manager failed, right? uh, Material price variance in soya bean, the planning variance was adverse. That means he failed to negotiate well. But in sugar, he was good, right? So that's something which we are supposed to write. Evident that in case of soya bean, the purchasing manager wasn't able to, was unable to negotiate well with supplier, resulting in how much adverse variance? 36,660 adverse variance. However, he what you can write, he uh, negotiated well in buying sugar, which resulted in saving of how much money? 1373. Therefore, therefore, um, overall performance was not up to the mark, as overall operational variance was. It should be in the same paragraph. Sorry, should be in the same paragraph. Overall operational variance is how much? Operational variance is 3735287. Right? So for 4 marks, it's more than enough. For 4 marks, it's more than enough, right? We started with total material variance, right? We said that okay, overall it seems favorable. Then we say that okay, fine. Look at the planning variance. This is something for which we cannot blame product purchasing manager. This is something for which he should be blamed. So overall, his performance was. So this is basically the overall performance. It's a kind of conclusion, basically, that overall he couldn't perform well because overall costs were high as compared with the expectations, right? Same we will write in material usage variance for production manager, right? So I'm not going to write complete statements. I'm just trying to explain what actually happened. So in case of production manager, overall, we didn't do the calculations here, unfortunately. Mm, so overall planning variance is 28320 favorable, and operational variance is plus 1728 30048. 30048 um favorable, and operational will be 16, and this one minus 16, 17384, right? So operational variance is 18,384. Now we will use approximately same strategy, but you are not supposed to write this part again, that planning variance arise because of uncontrollable factors, because that we have already explained in first part. So we will start with the total variance, right? We will say that overall variance is 30048 minus 17384. So overall variance is 212664 favorable, right? And this favorable is again because of planning variances, because 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 the government actually asked the company to reduce sugar price, sorry, sugar consumption. So sugar consumption reduced, resulting in sugar consumption reduction and soya bean reduction, because of, in order to maintain its consistency, resulted in overall planning variance of how much? 30048 favorable. Then we will change the paragraph, and then we'll write again. And since operational variance and considering the operational variances, it seems that the labor is uh, unable to use the revised mix in a proper manner, because we can see there is a huge adverse variance in soya bean consumption. There's a little bit adverse variance in sugar consumption. So overall it seems that the labor is struggling in using material in a proper manner. So of course, it all these variances will go for the performance of operational manager, and ultimately he is responsible for that, right? So in that note, overall we will conclude that the performance of purchasing manager or production manager doesn't seem satisfactory. However, uh, maybe because this is a new mixture, they were unable to mix it well. Maybe in future the result might be different, but again, it can be only identified in future periods, right? So that's more than enough for 4 months, right? So that's basically how we can overall split. So you have to put two headings: performance of purchasing manager and performance of production manager, and then you have to write accordingly that how actually they performed, right? So that's basically all what I needed to explain today: how to write plan for planning and operational variances, how to do planning and operational variances. From next session, we will start performance measurement. Performance measurement has the same issue. In variance, you students struggle in writing the answer. In performance measurement, students also struggle in writing the answer. So we'll do two questions. We'll do two classes in for performance measurement, and then we will probably one class of decision making, because decision making, I just want you guys to cover decision making at least so that we can do its MCQs. Any comments? Anything would you guys would like to share?
Not for me.
I hope everything is well.
Yes, please.
Okay. So I'm finishing today's session, right? Next session will be on coming Saturday, right? We'll start with performance measurement. We will do two questions, one question on one Saturday, one question on another Saturday, so that you guys can understand which factors we need to understand when we start writing the answers. All right. So if you have any comments, if you need anything, if you have any comments, just share it WhatsApp. I will share two quiz papers with you. One for uh, costing methods, and one is for material mix and yield variance. Material mix and sales mix variance. And in a day or two, I will probably share um, a question paper or a mock paper for planning and operation variances as well. All right. Till then, take care of yourself and do
No.
good preparation of performance management. In case of any issue, just let me know. All right.
Hello.
Take care. Bye
Thank
bye.
you. Okay, bye.
Hello.
Hello. Yes.
Yeah. Please, could I just wanted to confirm. The live lectures, are they being uploaded? Because I don't think I have seen any of them on
Yeah,
the.
yeah, that's actually my blunder. Because there were only two students, so I thought that probably since they have attended the session, I will do it today. Don't worry. It's my laziness. I'll do it today. Don't worry.
Okay. Okay. Thank you.
Thank you. Take care. Bye bye.
Bye bye.
Sorry, what did you ask? Hello, are you still there?
Yeah. Hello, Kelly.
What did you ask?
Yeah.
I left.
Yeah. I was asking her whether she was uploading the live lectures, and she said she has not done that, but she will do that today.
Ah, okay.
Yeah, because I can't see them on the platform. That's why I asked.
Mm,
Mm,
okay.
yeah.
Thanks.
You're welcome.